Greetings, this is Manu Walia from Continuum Global Asset Management. Today is March 17th, 2020, and the last video that I posted was on February 28th. As usual, I'm talking about the markets and what's happening with the coronavirus. I don't need to belabor the point, but the most important thing that I mentioned last time was that I believe that the markets are going to withstand this epidemic pretty well for various reasons. But back in February 28th, I talked like it was so many months ago. It was just a couple of weeks ago. The markets had lost almost 14%. Since, the markets have lost another 16 to 17%, depending upon which day you look at. Obviously, I was a little early to enter the market, but I still believe in the paradigm and the framework that I had presented, and I believe that this is a good time to move into the markets because now we're down almost 30% from the top, and this decline is primarily driven by, in layman terminology, fear. We don't have a banking crisis. We don't have a crisis of monetary or fiscal side on the government side, or anything which really brings the fundamentals down to its knees. On the same token, fear itself can feed onto itself and create a recession. So I don't want anyone to think that I am completely dismissing the adverse impact that Corona will have on the economy, but I do want to show what's happened in the past when we've had instances like this and how the markets have reacted. If you look at this chart, this is a chart that I took out of Market Watch, a website which had a wonderful article on what's happened post events like SARS, swine flu, other different outbreaks, and how the markets reacted post events like that. If you look at these events, they're spread throughout the last 30 to 40 years. I mean, this chart spans back to 1970. But the two most important events took place, which were SARS and swine flu, back in 2003 and 2009, respectively. As you can see, both of these events were pretty bad for the markets. And the markets had lost almost 50% from the year 2000 to 2002. End of 2002, and then about 45% during the major recession which took place in 08 and 09. Now, it's very easy for me to show you, highlighted here in these yellow stripes, that post-SARS and the swine flu, the markets moved up 21% and almost 40% in the following 6 months of these two respective outbreaks. One more time, after SARS, the markets moved up 21% in 6 months and 39, almost 40% post the swine outbreak. Now, we can't just say that this is a fact, because there were other parameters which were working which need to be considered. Obviously, in 2000, 2001, and 2002, it was the dot-com that busted and moved the markets down. And obviously, we were rebounding from that. Post 2008, 2009 recession, again, maybe the swine flu happened to happen at such a point that it was in favor of the markets and the markets were rebounding. But be that as it may, you can clearly see that any economic recession overshoots on the downside and any euphoria overshoots on the upside. I believe that there are certain sectors that are going to be hurt very badly. To name one, which is the most obvious, is travel and leisure. Anything surrounding that area is going to be hurt pretty bad. So I'm not asking people and clients to go out and buy airlines and you know, Carnival Cruise or other cruises like that. And there will be a time to buy those. But there are companies which are very strong, retailers like Walmart and Costco. And if you have a little bit longer term horizon, 12 to 18 months and post 12 to 18 months, then industries like that make a lot of sense. Having said that, the total deceleration in the US economy, in my mind, could be between $3 and $4 trillion from the coronavirus. We have so far lost close to 10, 11 trillion dollars in the US market capitalization. It just doesn't make sense to me that the market loses almost 3.5, 4 times of what we expect the economy to suffer by. So I think that I truly believe in what Howard Marks just said recently. He said maybe it's not the bottom, but stocks are obviously cheaper than they were yesterday, day before, 3 weeks ago, and it is a good time to start adding to your portfolio. So having said that, you can read a lot more on our website, which is cgamadvisor.com, or you can even contact me through the website or give me a call. I hope everybody keeps it calm, and we hope for the best, and thank you for watching.